ensure that the recognition, the measurement, the disclosure will be able to capture that unique nature of the activities. Okay. So given that Islamic institutions such as Islamic banks are established to meet the socio-economic objective of the Sharia, this institution should logically use Islamic accounting. If such a system is used, then Muslim users will make decisions in a manner congruent with Islamic values, and this socio-economic objective of the Sharia will be achieved, thus strengthening the Islamic economics and financial system. So what we are discussing here, Islamic accounting can give this ethical-based accounting, which measure not only profit but also social, environmental, and also religious performance. And what we are what we can understand from the commercial accounting will be only focusing on profits. But when we talk about Islamic accounting system, the presentation of the information in the financial statement of the institution will be able also to capture this social, environmental, as well as religious performance. Okay, so this is why we need Islamic accounting. And there are also few economic issues related to accounting. The first one, we talk about this infaq, where we can spend in the way of Allah Subhanahu Wa Taala to the poor, needy, or relatives for the socio-economic purpose of that particular person. So this also part of the accounting and come from these economic issues. Number two, we be discussing in the last session about the provision of interest or riba. Okay, so in the Islamic banking institution, then we will expect more on the financing perspective, as well as this profit sharing arrangements. Okay, so there's no interest in the Islamic financial institution. Then number three, we talk about the commitment to fulfill the contracts and also trust, also part of the economic issues and also related to accounting, because at the end of the day, that also be reflected in the financial statement of the institutions. Okay. Number four, avoiding zulm, injustice, exploitation, and usurpation of others' right. So what happened in this? Everything must be fair. So there shouldn't be any injustice, any exploitation, and also to be unfair to others. So that also the one that related to accounting. And then the next one, we talk about seeking Allah Subhanahu Wa Taala bounty. So whatever we do in the transition, our objective is to achieve falah, success in this world and also in the hereafter. So that also will be part of the issues that can also be later related to accounting. And the last one, avoidance of neglectfulness. When we talk about, we have to give to others, meaning that in the form of zakat, for example, to purify the income. So that also part of the issue that related to accounting. And the other part also very important when we talk about accounting is the importance of ethics. So using an ethical approach to incorporate ethical principle into accounting operation develop numerous problems because there is no common source from which ethical values may be derived. Okay, so from the Islamic perspective, however, fundamental business ethics flow automatically from the practice of religion rather than codes imposed by members or imposed upon members by the professional organizations. So what we'll be expecting for Muslim, we don't need any code of ethics because Muslims should be ethical. Okay, and accordingly, developing an Islamic accounting theory using an ethical approach is more neutral. So the Sharia will provide the common source from which guideline on what is considered as ethical business practice could be derived. So what happened, what I'm trying to relate from this slide is the link of ethics and accounting. So when we have this accounting system, the accounting system also must be able to be ethical. So everything must be reported according to what is actually really happened. and there should not be any unethical behavior in the institution. Okay, so again, when we talk about Islamic banking, then this should be also ethical banking. So everything must comply with the Sharia, and that Sharia actually provide the common source from which guideline on what is considered as ethical business practice could be derived. Okay, so before we talk about the process itself, then the book also discuss about how to develop a theory of Islamic accounting. So there are two approach. The first one is the empirical inductive approach. This was very philosophical for this part. I'm going to go very quick as well, because if you need the detail, then maybe you can also read from our textbook and also maybe from any accounting theory book. So the first approach actually start with the theory. The approach develop a theory based on the generalizing from empirical phenomena. So they talk about what is and help to predict future instead of determining what it ought to be. Okay. So what happened in this theory? They talk, or in this approach, they talk about when you want to develop the theory, you will generalize from the empirical phenomena. Then this actually what we call the empirical inductive approach. Okay. In the case of accounting for Islamic bank, what is being practiced is based on the Western secular framework. Thus, using the empirical deductive approach may not be appropriate. Okay. So, what is more relevant for the Islamic accounting theory is to use this normative deductive approach, where more objective, more value laden, as they start from a value judgment, and thus the normative deductive appear to be more appropriate and relevant to develop Islamic accounting, as Islamic accounting theory has the nature of prescription about how things should be done to satisfy the Islamic objective rather than description about how things are done in practice. So this will have to start with the deduction of objective of financial reporting from the postulate and definition of accounting according to the principle and objective of the Sharia. So that's how the deductive approach will be used as compared to this the empirical inductive approach, also known as positive approach. So what we are suggesting in our book that this approach is better to develop the theory of some accounting as compared to the empirical inductive approach. Okay, so next slide is the differences between Islamic accounting and conventional accounting. So the different can be captured in these three parts. Number one is objectives. Number two is type of information. And number three, the users of the information. Okay. So if you can see from the objective part, Islamic accounting actually, as mentioned earlier, to determine whether the organization comply with Sharia, and also whether the socio-economic objectives are achieved. That's what we talk about the objective of Islamic accounting. As compared to commercial accounting, to permit informed decision by users whose ultimate purpose is to efficiently allocate scarce resources to their most efficient and profitable users. Okay. When we talk about type of information, Islamic accounting will have more information to be considered because you need to identify socio-economic religious event, use current values, de-emphasize the focus on the profits, value-added statement, environmental report, social responsibility reports. But when it comes to commercial accounting, the focus or the type information will only be to identify economic events and transactions, and the use of lower of historical cost and current values, although currently the emphasis is also on fair value. Okay, so now I think when you talk about commercial accounting, the emphasis is now on fair value accounting. If we are not going to really use this historical cost basis anymore, because everywhere we'll be talking about fair value measurement. Okay. Now, if you move to the users of the information, under Islamic accounting, the users will be a bit wider because we talk about equity holders, current saving account holders, regulatory agencies such as central bank, other depositors, investment account holders, zakat agencies, other who transact with this business with the company, the community. But for commercial accounting, maybe the focus more on elite group, creditors, bank, investors, regulatory agencies such as the central bank. In general, when I compare these two, I can see that for the Islamic accounting, they have additional users as compared to this commercial accounting. Because users of Islamic accounting also include zakat authorities, which is not there in the conventional accounting users. Okay, these are regulatory and governance framework for the Islamic banks. So what you have here, I think when we talk about Islamic Bank is the intermediary. I think we talked about this in my first session last week. The intermediary between the two groups of customers who have excess money and customer who are in deficit of money. So customer who have excess money will go to Islamic bank to deposit or to invest their money. And the customer who need the cash, they also will go to the bank, to the Islamic bank to get the financing. That's what we have the Islamic bank just as intermediary in this situation. Okay. So the framework inside this Islamic bank, you can see from this diagram, we have the shareholders, the investment account holders, and also other stakeholders who have stake on this Islamic bank. From this side, we also have audit committee. We also have the governance committee, and also very unique to Islamic bank, the Sharia Supervisory Board. In the case of Malaysia, we use the term Sharia Committee. Okay. And when you look here, we have several accounting standard setting organization here, which include IOFI, MSB, Malaysian Accounting Standard Board, and IASB, International Accounting Standard Board. And also we have Islamic Financial Services Board, more on the supervisory guidelines. Okay. And we also have Bank Negara Malaysia here, Central Bank in the case of Malaysia. So this will be the framework for the Islamic bank in particular in Malaysia. So if we want to understand the accounting standard govern this Islamic bank, when come to Malaysia, in the Islamic Financial Services Act 2013, IFSA 2013, as mentioned clearly that Islamic financial institution, including Islamic banks in Malaysia, must follow the approved accounting standard in Malaysia. So the approved accounting standard in Malaysia is actually MFRS, or the international version is the IFRS, International Financial Reporting Standards. So all Islamic bank in Malaysia must use MFRS or IFRS because that is mentioned clearly in the IFSA, in the Act. Okay. And Bank Negara Malaysia or Central Bank of Malaysia also issued several guidelines, and I think we'll be discussing on that in the following week. What are the guidelines issued by Central Bank of Malaysia, and what are the standards issued by all these institutions to govern this Islamic bank. Okay. I just would like to focus this side of the framework here when we talk about all these parties. Okay. Because we talk about governance framework, because governance framework will have all these board of directors, audit committee, Sharia committee, and also governance committee. So this is part of this governance framework of the Islamic banks. Okay. So mainly that's the coverage for the the third chapter in our book, talking about the regulatory governance framework and talking about the difference between Islamic accounting and conventional accounting. Okay. And the next chapter, chapter 4, is actually covering this conceptual framework. So at the end of the chapter, we expect the student or whoever reading that chapter will be able to explain the need for and the importance of the accounting conceptual framework, describe your fee conceptual framework, evaluate the methods to develop Islamic accounting standards, and discuss the financial statements that are unique to Islamic bank. So this is what we are hoping to achieve by the end of this chapter on the conceptual framework. So what is this conceptual framework? Conceptual framework actually the framework or the nature and purpose of accounting. The framework is important as it underpins the development of accounting standards. So before the standard setting organization, for example, IOFI, International Accounting Standard Board, issue accounting standard, the first thing they have to do is to start by preparing the conceptual framework. Okay, so with this conceptual framework, that will really assist the standard setting organization here to develop the accounting standard. Okay, so in other words, that actually a frame of reference, and this actually for the evaluation of existing practices and development of the new ones. So what is actually inside this conceptual framework? Number one, the objective of financial reporting. Number two, the qualitative characteristic of useful financial information. Number three, the definition, recognition, and measurement of the elements from which financial statements are constructed. And number four, the concept of capital and capital maintenance. So when it comes to YOFI provide two methods to develop Islamic accounting concept. Number one, we start with the objective based on the principle of Islam and its teaching, and consider this objective in relation to contemporary accounting thought. So what happens in this approach, we will start from fresh, from the principle of Islam itself. Then from there, we develop the contemporary accounting thought there. But the second, we start with the objective established in contemporary accounting thought, and then test them against Sharia and accept those that are consistent. Okay. So I mean that the second approach will be more practical, because we start with whatever already exists. Then from that objective, we will check whether comply or against Sharia, and we only accept those that are complying with Sharia. The first one is more challenging because you start from fresh. You don't have any reference, but you will start by developing the objective from the principle of Islam itself. But the second one is more relevant because we can start with whatever is already there. And this is what actually YOFI has taken this approach, because YOFI has started with the contemporary accounting objective, and then they check whether comply or against Sharia. Okay. So YOFI has listed 5 benefits to establish the objective of financial accounting for Islamic bank. Number one, to this as a guide in developing financial accounting standard. Number two, to assist Islamic bank in making choice among alternative accounting treatment. And number three, to act as a guide and regulator of selective judgment. Number four, the objective when properly defined should increase users' confidence. Okay. And number five, this should also lead to the development of accounting standards which are likely to be consistent with each other. So this actually the benefits by AOFI when we have this objective of financial accounting. Okay. So for objective of financial accounting mentioned in by AOFI, number one, to determine the right and obligation of all interested parties. Number two, to contribute to the safeguarding of the Islamic bank asset, right, and the right of others in an adequate manner. Number three, to contribute to the enhancement of the managerial and productive capabilities of the Islamic bank. Number four, to provide through financial report useful information to users of these reports to enable them to make legitimate decisions in their dealings with Islamic banks. Who are the users and type of mention according to YOFI? We have 1, 2, 3, 4, 5, 6, 7 users. Equity holders, current and saving account holders, like regulatory agencies such as central bank, other depositors, investment account holders, zakat agencies, and also others who transact business with the bank. Okay. So these are the financial statement of banks. In the box there is the same with commercial bank. Okay. So what you can see that for the Islamic bank, they have 1, 2, 3. They have five financial statement that are similar with the commercial bank. Statement of financial position, statement of income or statement of profit or loss, statement of changes in owner's equity, statement of retail earnings, and also statement of cash flows. So these five are exactly the same as what need to be prepared in commercial banks. But on top of that, Islamic Bank will have to prepare these three additional statements according to EOFI. Number one is statement of changes in restricted investment. So we'll be discussing on restricted versus unrestricted in the next session. So under the EOFI, Islamic Bank must prepare one statement to show these changes in the restricted investment as separate from the statement of financial position. Number two, Islamic Bank also must prepare statement of sources and users of funds on the zakat and charity fund. So this also required by EOFI. Okay. So mean that Islamic Bank will have to prepare a separate statement to show the sources of zakat, the sources of charity fund, and also the users of zakat and also the users of charity fund. So with that, I think we can also see from that statement later that the users of zakat fund will be distributed to the 8 asnaf. Okay. And the third one, Islamic Bank also must prepare statement of sources and users of funds for card fund. Card fund actually the zero profit loan or no extra for this loan. So if the Islamic Bank provide 1,000 to the customer, customer also will pay 1,000. So according to your fee, Islamic Bank must have a separate statement on that, and that will be put under statement of sources and users of funds or card funds in that Islamic Bank. Okay. So what you can see from this particular financial statement, if you want to relate to IFRS or MFRS, MFRS only require the one that in the box there, meaning that Islamic Bank need to only prepare that 5 statements in their annual report or in their audited financial statements. Okay, but that 3 they can also prepare but not mandatory. The 3 statement of sources zakat, users and sources and users of zakat, statement of sources and users of card. So this one actually also good. Islamic Bank in Malaysia can also prepare, but it's not part of the mandatory financial statement to be prepared by the Islamic banks. Okay. So these are the 3 unique, only put clearly in this EOFI, which is mandatory under EOFI but not mandatory under this IFRS or MFRS. But when come to Bank Negara guideline, Bank Negara also did mention the importance of zakat statement and also the card statement. So it's also good if the Islamic Bank can also provide this additional statement when they prepare their financial statement. Even though the normal auditor will not really ask this statement because it's not really mandatory. But for the user to appreciate the Islamic Bank's transaction, I think the user would want to see the existence of these additional statements. Okay, so we have this accounting assumption concept. This assumption still what you can see in the conventional accounting assumption. We have to prepare the financial statement or to have this accounting. The accounting must have some assumptions. Otherwise, we cannot do that. So the first assumption that need to be there will be the accounting unit concept, the accounting entity concept, where there must be a separate entity, meaning that the Islamic Bank and the owner of the Islamic Bank need to have a separate entity, separate legal entity. So they have to have the business versus personal. So this under the accounting unit concept. Number 2, we have this going concern concept, meaning that the institution is going to be assumed to continue to have this going concern, continue into the foreseeable future. Number 3, periodicity concept, meaning that the financial statement will be prepared according to the period. And again, I think there's no issue because when come to zakat also, we compute zakat based on haul, which also based on the period. So that's why we are in the opinion that this concept is accepted from the Islamic perspective. And the last one, the last concept is the stability or the purchasing power of the monetary unit. where we will assume that the purchasing power remains stable. Otherwise, that will also will have difficulty in preparing the financial statement. When we talk about process, accounting process cannot be done without these four process. Number one, recognition. Number two, measurement. Number three, presentation. And number four, disclosure. So I think what happened in the future discussion, when we cover every product in the Islamic bank, we will be discussing the process according to this recognition, measurement, presentation, and disclosure. Okay, the quality characteristic of the accounting information, number one, must be relevant. The information must be relevant. And that relevance is divided into these three. Predictive value can predict and also can back the feedback from the prediction, and also must be on time, okay, to make it relevant. Number two, the information must also be reliable. And this can also provide this representational faithfulness and must be objective and must be neutral. Number three, we talk about comparability, meaning that you can compare that statement from year to year or from one entity to another entity. That will make the information will be more quality or increase the quality of the information. And then consistency, meaning that the information is consistent. If you prepare this year and also prepare next year, you will have the consistent method. Otherwise, it cannot be compared between the two. So comparability and consistency will always come together. And the next one, we have this understandability, meaning that the information must be able to be understood by the users. There's no point of preparing so many information in the financial statement, but the users will not be able to appreciate the information. So this is what we are referring to, the qualitative characteristic of the accounting information. Okay. And in the process of preparing the information, we will be referring to this materiality, meaning that the importance of the information. Number two, the cost of the information, because what we'll be expecting here, the cost should be lower than the benefits. So if the cost more than benefit, then no need to prepare the information because there's no benefits to the users. So I think we will have to undertake this cost benefit analysis to see which one is higher. And number three, educate disclosure. Mean that disclosure can give the users information for them to make good decision. That's what we mean by educate. Educate doesn't mean that they have to present everything, including confidential information. But educate means that the information to be presented must be able for the users to make the valid decision or good decision. Okay, so that is the part on the preparation and presentation of account information. So these are the basic elements of financial statement. So those who are in accounting, maybe you are already familiar with this term. So in the statement of financial position, we will have asset, liability, equity of unrestricted investment account and also owner's equity. In the statement of profit or loss, we're going to have revenue, expenses, return on unrestricted investment accounts, and that will give either net income or net loss. Okay, so what you can see under these elements, everything here actually mentioned in this conceptual framework. So this chapter actually is discussing on the conceptual framework of the YOFI, and also we can also relate also to other accounting standard setting organization, where everything must be clear in this framework, so that when they go to develop the individual accounting standard later, everything will be consistent. And the framework is there, like the format, the way they should be discussing in that standard is clear to all, because everything will come from this conceptual framework. So with that, I believe I will stop here for my discussion, and I pass to Brother Shahran.
Thank you so much, Prof. We have many questions on the chat. Maybe Prof can look at it, or you also can raise your hand here on my screen and I can unmute. Okay, we have Afad there. Right, can you unmute
Yeah,
yourself?
attending, Brother Shara, sorry. From my is attending or not?
Let me find his name.
Because if from my there, then probably can also assist me to answer the question.
She's not here.
Oh,
She's not on the screen. Maybe she's using different name.
Okay.
Afrad, go ahead.
Yeah, thank you, Dr. Shahran. Prof. Noraini, how are you?
Alhamdulillah. Thank you for
Alhamdulillah.
the invitation.
I think we met at Tazkia, last year, I think.
Oh, yeah, okay.
Inshallah. Yeah.
Yeah.
Today, tonight, what I would like to ask you is about zakah. What is your opinion if a real sector company using IIIT standard on zakah? Is it possible? Because a real sector company such as a factory or maybe fashion or other kind of halal industry doesn't have any reference in Sharia accounting, or maybe there are reference in Sharia accounting for real sector economy. Yeah, please share your opinion. Thank you.
Okay, Brother Afrad, yeah?
Yeah.
But I can recognize your face, okay? Alright, thank you for the question. Yes, I can understand zakat actually is very challenging even for Islamic bank and also Islamic financial institution in general because we don't have any specific zakat standards. And I think what happened in Malaysia, we are now trying to develop the zakat standard so that we be consistent throughout the zakat computation, throughout the zakat disbursement and so on. And even more challenging to the real sector because they don't have any reference, any guidelines, any standard to be used as their basis to do the computation. So again, I think what if you ask my opinion, I am in the opinion that zakat must be provide. This institution must pay zakat because they are involved in this particular Islamic transaction and also for benefits of the society. And we need someone or one entity, the regulator, or to come up with the zakat standard for them to use as a reference. Otherwise, I think in each institution we have to come up with their own manual how to compute zakat, which also can have a problem because then they will not be consistent from one institution to another institution. But if this come from the top, then it's better because they have the standard. I know, this actually just the suggestion. It's not easy, very challenging to do that. But if we have this standard, then that will solve a lot of problem. So maybe we have to start somewhere there. And hopefully this real sector will be able to start computing their own zakat based on what they their resources they have in their institution. Maybe if they have one institution that start the ball rolling there, meaning that one institution will do this, hopefully everybody can collaborate later and come up with the zakat standard. I still in the opinion that we need zakat standard. For the institution and also for the real sector to use. Otherwise, that will have problem of comparability, consistency, different standard from each entity and so on. Okay. So
Muhammad Mizanur.
Yeah. Thank you. Assalamualaikum.
Assalamualaikum.
Brother Sharan, this is Mizanur Rahman from Bangladesh.
Go ahead. Yeah. Maybe your question. Yeah.
Thank you very much. I had a question to the madam. I am working with the Zakat organization in Bangladesh, Center for Zakat Management. We are providing management service. We are providing management service. We want to establish the Zakat in the society so that the poverty can eradicate. But there is a big question. The huge number of the people do not want to know what is zakat. Even the Islamic banking we have a largest bank called Islamic Bank Bangladesh Limited, but they don't have any input to their client to expose or to entertain how to expose the zakat in the society, or what is the impact in the society. So what is your suggestion, madam, please?
Okay, thank you for the question, brother
Mizanur.
Mizanur from Bangladesh. Okay.
Yeah.
What I understand when we talk about zakat, we have two type of zakat. One is the zakat for the individual. The individual also need to pay zakat for your own assets or for your own resources. And we also have the zakat on the entity, the business zakat. Okay. So when come to this Islamic bank or come to the institution, I think institution will have to also pay zakat, and they have to have the manual, as I mentioned earlier with the first question just now, how to do the computation, because zakat computation is not as straightforward as what you learn in the textbook. When come to the real computation, you will see so many adjustments to be made, because it's not like when we learn in the textbook, we only have the two method, asset method, and also the working capital method, and also the gross method. But when come to the real computation, I have experienced that as well. There are so many adjustments that you have to take into consideration before you can compute zakat. And again, if people did not understand what is zakat, they also will not be able to appreciate the zakat computation. And zakat computation also require you to understand accounting, because you need to understand all the elements in the financial statement, the asset owned by the institution or the asset is not owned, whether it's how, not how, period there. So everything must take into consideration when you compute the zakat. So we need a zakat menu or zakat guideline for the purpose, right? And then need to educate the people the importance of zakat. Because if you can see Islamic bank pay zakat, then that will help a lot of give a lot of assistance to the society, to the asnaf. And what happened in Malaysia, we can see that it's now becoming a trend, or all Islamic bank in Malaysia pay zakat. And that really helped a lot, especially during COVID-19. We can see that all of the Islamic bank or takaful give a lot of also fund to help this COVID-19 people up due to this pandemic. So this zakat actually really relevant, but we need proper mechanism, proper system, and proper standard for us to be able to compute that correctly. Because zakat have to be fair. You cannot compute to, they have to be fair to both parties, to the zakat recipient or to the zakat payers, because otherwise will defeat the purpose of zakat. You can give more to zakat payers, but maybe not fair to zakat. You give more to zakat recipient, but maybe not fair to zakat payers, because you compute the wrong amount. So when come to computation, also what I hope that the computation must be correct based on the Sharia requirement, so that we are fair to both. Those who are going to receive the fund and those who are giving the zakat fund. So very challenging when it comes to zakat.
Ada Syamsul Idul Adha, please.
Okay, thank you, Dr. Shahran, for the time. I have a question about the issue of the conversion a conventional banks into Islamic bank. What is the most fundamental impact when a conventional bank converts into Islamic bank, especially regarding their financial statement or their financial uh, performance or their financial structure? I think the 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 application of Islamic banking accounting standard will impact largely on the entity of the converted conventional bank. That's the point of my question. Thank you very much.
Okay, thank you, Brother Samsul Idul Adha. Okay, very good question, because when we talk about this conversion, actually we are hoping that many more commercial banks converted into Islamic bank, so that we can have a good Islamic banking system in the country. But when come to conversion here, you cannot somehow ignore the issue, the accounting issues. Because when they want to convert asset, liability, equity from conventional to Islamic, each of that item you must be able to discuss separately. So asset, you have so many items under asset. So if that asset commercial bank would like to be converted into Islamic bank, then each of the asset you have to see whether any Sharia issues in the asset. If it's the neutral one, meaning that no Sharia issues, you can convert as it is. So meaning that, for example, PPE, property, plant, equipment, the building, for example, you don't have problems with the building. You should not have any Sharia issues in that building. So the building you can transfer to Islamic bank book. So there must be two books here. The first book actually conventional books, the conventional bank financial statement, and then you have another Islamic bank financial statement. So you need to bring from that book to another book, but you have to see one by one. So if there's, this one require another 1 hour or 2 hours discussion, but maybe to make it short, you have to analyze one by one of the item and see whether the item has Sharia issues or not. And if there's Sharia issue, then you have to decide from the discussion or bring to the Sharia committee of the institution to decide how to deal with the issues. If there's no issue, then you can transfer as it is. So that's what I can answer so far from your question. I hope I answer your question. Okay.
Next is Sikiru. I try to unmute yourself. If not, we go to Brother Abdul Ghani. Okay, Brother Abdul Ghani first. Okay.
Assalamualaikum.
Salam.
Prof, I want to ask. Assalamualaikum, Prof. Thank you very much for the lecture.
Yeah, go ahead. Yeah, go ahead.
Now, I want to ask about a question. Over here in our country, some conventional bank practice Islamic finance on a window basis, whereas they are not full-fledged Islamic finance, but they offer Islamic finance to customer. And in this sense, most people like patronize them in that through that window. So I don't know, is that transaction Sharia compliance or so?
Okay. All right. I think when we talk about, thank you for the question. When we talk about Islamic window, I think it's more, a bit challenging as compared to the full-fledged or compared to the Islamic bank subsidiary. Okay, because Islamic window, because you will be sharing the same resources with the conventional banking, because this actually commercial bank, but commercial bank offer Islamic banking product. That's normally what happen in the windows. So that window is not another entity. Still the same entity as the commercial bank. Okay, but as long as that window also have Sharia committee or Sharia board to supervise the window, then I'm in the opinion that window is still Sharia compliant. But that window must have a proper governance lah. When you talk about that window, meaning that commercial bank need also to engage Sharia members to advise the window, so that the transaction in that window also comply with Sharia. And when come to the financial statement as well later, when the preparation of financial statement, they will not be reflected in a separate statement because just a window. So what you can see from that window, the activity of that window will be reflected in conventional bank financial statement. But what I hope that window can have the financial statement for the windows in the notes to the financial statement. Because in the main statement, in the main financial statement, they will not be able to show the financial statement for the windows because window is part of the entity, the big group of the commercial bank. But when it comes to the reporting, in the notes to the financial statement, I would expect that that entity will be able to show the financial statement for the Islamic windows in that notes. And that hopefully can solve some of the issue or will ensure the user to also appreciate the activities in the Windows and must also be signed off by the Syarah committee of that institution. That's a special statement on the Islamic banking Windows. And maybe moving forward, that window maybe also will have the intention to become the subsidiary. That's why in Malaysia, we start with the Windows, then later the window become the subsidiary. For example, Maybank. Maybank start with the offering Windows in their bank, but later Maybank decide to open Maybank Islamic. And Maybank Islamic is separate entity. Okay, so I would prefer subsidiary as compared to window. But to start also maybe we cannot start with subsidiary, we have to start with window. Especially those countries who are not yet having Islamic bank. Normally what we advise to that country, you can start with Windows first. Commercial bank offer window. Then slowly that window can become subsidiary and maybe later can become full-fledged. Very ambition if you want to start straight away commercial bank become full-fledged. Very challenging to convert 100% conventional bank to Islamic. But if that can be done, also good. But maybe to start with, we can start by having the Windows. Okay. Hope I answer your question, brother Abdul Ghani.
Okay, Prof. We take last one from Brother Adamu. There are many questions on the chat. I will print it out and deliver to Prof. Noraini next.
Yeah.
She will answer. For the last one, Brother Adamu.
Thank you, Shahran. Thank you, Prof, for well-educated presentation. Actually, part of my question that I want to ask, you just answer it from the GNU point of view. It's about how to compute, how to report financial activities when an organization or when a bank is operating a window of Islamic finance and other conventional finances.
Okay.
Here in where I work, we deal with only agricultural financing, but we don't have any form of products that has to do with Islamic compliance. So I'm trying to follow all the discussion in such a way that at the end of my course with IIIT, I can be able to collaborate with people like you and any other interested participant to come up with ways with agricultural compliance products for the last majority of Nigerians, as it is about 60% of our populations are Muslims, but because of riba, they are in one way or the other financially excluded. As a Muslim, being here and have the capacity, being with the management, I think it is going to be a bold step for me to come up with with Islamic financing compliance products for agricultural financing. Thank you.
Okay. So it's not a question, right, brother Adamu? Is it just your opinion? Or is it in your statement just now? I missed that part.
Brother Adamu is talking about this agricultural financing because he's dealing with agricultural product.
Yeah, but that one actually can also be Islamic perspective, meaning that we have this Islamic financing for agriculture. And perhaps maybe the concept of salam can also be applied there for this agriculture financing.
Okay.
It's not really widely used for this salam financing, but maybe we can have one more. I mean, the future session will be talking about salam. And I can see from the chat also you are requesting for zakat part in the discussion. Last session will be on zakat because in week 7 there will be the accounting for zakat to be. So we will have to follow the schedule in the book for our series rather than we can go to zakat next week. Okay.
Okay, Prof, final words before we close.
Okay, mainly what I would like to say be thank you all for attending my session. Hopefully, I'm sorry I'm not able to answer all questions, and I can see so many questions also in the chat there. but hopefully like you benefit somehow from this short sharing session. In just sharing session, I'm just sharing what I know, and also I would like to learn from different country perspective in regard to this issue. So maybe during this session we can learn with each other. And okay, that's all. Thank you very much, and assalamualaikum. Thank you, Brother Sharon.
Thank you so much, Prof. I think this is amazing. This very